it just feels like two estate agents that are pitching business that no one believes in, with the two of them when they go up and, they just look like absolute donkeys, don't they?
One said 1%, one said 0.75.
Labour, we're talking about from a rental point of view, rights for tenants with pets and a 4-month notice period for landlords. I actually look at that and think, maybe I understand that a little bit.
I wouldn't really be fazed by it. On this week's episode of the Investors Corner, myself, Ian and Mike are going to talk about the rentals and sales market and where we're currently at with things. Is it good news? Is it bad news? We will talk about rental inflation, with it now being single-digit inflation compared to double-digit inflation last year. So is that good news? Is it bad news? What does it mean for you as a landlord? We'll also talk about how we've seen a 25% drop-off in rental demand. Now, you might be worried by that, but we're still seeing 15 to 20 inquiries per property. But listen in on those, learn more about that and why that's happening. We'll also talk about build-to-rent developments and how that's having an impact on local towns where you get build-to-rent developers going in that are offering premium rents, and how that's affecting the more local landlords. We'll also talk about election impact, tenant rights and legislation, landlord exit strategies. So this is a packed episode with information that you would want to hear if you're a property investor or landlord. So sit back, relax, listen to the episode, enjoy it, and make sure that you subscribe to the Investors Corner podcast.
Ladies and gents, welcome to the Investors Corner podcast. I'm with Andy Brown.
Hello.
Mike Robson. Myself, Ian Macbeth. Hopefully the cut then did the bit that we needed it to do. Today we're going to cover lots of stuff. Data, a bit of facts. What's going on? We've got an election around the corner. 4th of July. It's going to fly around that.
Might have mentioned that.
Yeah.
In the last couple of weeks.
Might have got some YouTube ads banned through what you were talking about in the last episode. So if that's whetted your appetite, go back and check out that one. Andy calls someone a sausage. Find out who by downloading last week's episode. But we've got quite a few bits to cover. I mean, I've been doing a little bit of looking into what Labour are talking about. What's the Halifax data saying? What are Rightmove saying? What's Mike saying? What's Andy saying? So, Mike, you're the man with 16 sheets.
Yeah, turns out the Zoopla report's quite a long one this month. So June 2024, year-on-year rents are up 6.6%, which, depending on which way you split a stat, that's the slowest rental growth we've had since 2021.
And 3 times above inflation.
Exactly.
So you can...
Yeah. Is it good news that rents are up 3 times the pace of inflation, or is it bad news that rents are growing at their slowest pace in 3 and a bit years?
I think for doing this podcast, we would be phenomenal at writing the front pages of newspapers, because we can just
two totally different front pages at the same time.
We can just flip it however we want to flip it. Who knows what this YouTube thumbnail will look like after this episode? But I mean, like you say, they're going up, but they're not going up as fast as they were going up.
Yes.
Yeah.
They're probably still going up a bit too fast in reality off the back of the last 24 months, I would say.
Yeah, okay. I think so. Yeah, I think that's a fair assessment. I think with rental inflation slowing down, so yeah, since 2021, I think a lot of that has to do with obviously the demand being down for rental properties as well, obviously. Now, what factors are causing that? Obviously, you may have people out there that have an affordability issues at the moment, that are finding other plans to move in with parents or find alternative accommodation where they can save money to eventually buy their home. Obviously waiting to see what happens with interest rates on mortgages and all of that sort of stuff. So yeah, people are finding other plans and not necessarily going into rental accommodation. I think we've seen that with one of the stats on the Zoopla report being that demand is down by 25%. Compared to this time last year as well.
It's another good stat that we can flip both ways, because on Zoopla reckon there's also an average of 15 tenants for every property. So demand's down 25%, but still 15 times the amount.
Yeah,
of
if I get 15 inquiries
available
per property, it's not all bad, is it?
Yeah, exactly. Yeah.
Well, I was saying to you guys off camera, I was talking to an estate agency owner in Newcastle yesterday, and they've actually got quite a few properties sat there vacant, and they're actually considering, do they talk to their landlords about offering tenants a month free or the first month free to effectively take the council tax bills off the landlords and get someone sat in there.
It'd be
which
interesting
I
to
was
see.
just like, what?
Yeah.
That's not round here.
It'd be interesting
you
to see
know?
why that is, because again, one of the stats for up north is that they've seen one of the highest inflation rates compared to other regions in the UK. So, yeah, are some people still overvaluing properties, or I mean, those properties could be pretty rubbish properties. Never know.
yeah, you don't know. I mean, I looked at Rightmove's report that came out last week for May, and you've basically got one area that's like 35% rental increase in the last 12 months. And then you've got a bulk of like 7 or 8, which includes Reading and Ascot from around here, that are about 19 point something percent. So those like top 10, if you like, are all 19 point something percent. And then Walton on Thames in Surrey, sort of North Surrey, just outside of London, like 34.6% rental increase in the last 12 months, which is bonkers for that little kind of area. But then it does make sense because it's just outside of London.
Yeah,
easy to get into.
Exactly.
Yeah,
nice part of the world as well.
Yeah, absolutely.
And I think you're starting to see a lot more people moving out of London now, because it has become unaffordable to live there. So even like Reading, you know, moving into Reading, we can get the fast train into London in what, 20 minutes?
And these are
25 minutes.
markets. These are markets that are being changed by big factors. Like we've been in Reading, and we went to meet the manager of a build to let development, and they had 400 odd units in this development, and they were outstripping the market by an easy 30% in rentals.
And those were high rents, like premium rents.
Yeah, that's what I mean. They're renting 2-bedroom apartments for London prices. Because they had co-working areas, they had underground parking, they had concierge, they had cinemas, gyms, everything in these buildings, and the quality of tenant was unreal. 99% occupancy, long-term tenancies. So that's what's potentially moving those places where build to rent professionals have landed.
So it's always been said location, location, location. But do we think now in this day and age it's location, location and those sort of factors? Is it no longer just it's all about location? Actually, is there an element of, if you've got this 0.5, this extra little bit here, like that concierge-led service,
potentially you can twist a market by doing that, because that's not the only building that's landed in Reading. There's probably 1,200 units that have been delivered doing similar things all around the station, which is that's a big notch, and there's probably another couple of thousand in building around the town doing the same thing.
I think a lot of people as well are looking for convenience as well. So if you've got everything like those on site, it's a bit of a no-brainer really for those, you know, people that work in London and, you know, want to get home late at night, want to go to the gym straight away. They've got nowhere to go. They're all on site, aren't they? So a convenience thing, a time thing as well. It just makes their lives easier. So I think it's slightly changed there.
And Ascot as well, being, you know, it's not, you wouldn't look at Ascot and go, right, that's a real rental hotspot, would you?
No, you wouldn't.
But to see that like the 6th highest moving, I wonder whether that's just because there is now more properties to rent and it's just created this statistic than what there was 12 months ago. I mean, it's got good train links because it is a kind of, it is a platform where you can get into all sorts of different locations depending on where you're trying to go. But they are building a little bit more in terms of like luxury apartments. But again, it sort of creates its own little micro. I mean, Ascot, you know, we could run there in less than an hour, couldn't we, boys?
Yeah.
Maybe you boys jump on the bike, but we could get there in less than an hour without car. So it is, you know, 4 miles up the road, 5 miles up the road, but totally different world in terms of rental prices. So that's quite interesting. Halifax on sales is in terms of the residential sales market, 0.1% change last month. Minus 0.3% change in the last 3 months, plus a 1.5 annual change, like pretty much in terms of pricing. Nationwide report the same. Rightmove fairly similar in terms of listing price. So all of the kind of sales average prices. I think there's like 100.
It's not the big negative that you
this is the big crash they all warned you about.
It's ridiculous,
right?
Isn't it?
So house prices are down 0.1%, but the volume of sales is markedly up. The volume of sales is way up month on month, year on year, in comparison to 2023. So house prices are being priced realistically, and people are moving.
Why do
That's
you think?
the big difference?
We've obviously got the election coming up, so we normally see that everything slows down before the election. But from looking at stats that recently been released, it doesn't seem to be the case in this time round. Why do you think that?
Well,
that sort of is?
I got the last 2 week data. I was just pulling up my phone because Paul from 20EA put the live data on yesterday from the last 2 weeks. So this is what is going on across not just Rightmove or one, but everything.
Yeah.
This is what's actively happening. And in the last 2 weeks, kind of after obviously the announcement of the general election, we've seen 9% increase in sales being agreed and 3.4% increase in instructions versus the same time in 2023.
Yeah.
And then I think Rightmove did a survey as well, maybe 10 days ago, 12 days ago, something like that. And people that were planning to make a move in the next 12 months, how many of those were put off by the election? 5%, 95% would just carry on as normal. So I think people are just like unfazed by it, really.
Yeah.
I mean, they're aware of it. And I think maybe as more of the campaigns lead up to it in the next 10 days, you know, kind of, especially obviously when we hit 1st of July and it's like right in that week's thick of it, maybe people will take note a little bit more, but hasn't really been anything, you know, from policies that have really jumped out and said,
I don't think anyone said anything that is scaring people, motivating people, worrying people. I think, and I don't think everyone's totally apathetic to the whole thing. They don't see Keir Starmer as anything different from Rishi Sunak. They just see it as just a load of meh. To be completely honest, and those stats don't surprise me because I got our bill through from our call handling service, and it's the GDP of a small European country. Frankly, so we know it's busy. It's just off the chain,
I think
which is a good problem to have.
They released their manifestos, didn't they? I think all parties have done it now, and there's nothing on there that stands out that's going to benefit people or have a negative impact on people. Well,
the only one that I see arguments about on Twitter or X or whatever it is putting VAT on private schools. It's the only one that I see has really kicked off as a contentious point of should people who send their kids to private schools pay VAT on that?
What?
Of all the things as well.
Is it fair? Is it not fair? Because everyone's paying their taxes. Should you be paying VAT on school fees?
Can you pay for them through your business?
No. Maybe business expense.
You can see Ian's mind going, well...
Can those schools start... are they charging for consultancy instead of schooling fees? The invoices start getting a little bit...
You know, because
a little bit crossed up.
There's a little bit of kind of maybe you see reasons why. I don't know. I mean, I think it just feels like two estate agents that are pitching business that no one believes in.
Yes.
The two of them, when they go up and, you know, they just look like absolute donkeys. Don't they?
Just
got no
one said
interest.
1%, one said 0.75.
Yeah. I mean, one of the things that Labour were talking about from a rental point of view, you know, rights for tenants with pets and a 4-month notice period for landlords. You know, they're two things which extending the notice period by ×2 to 4 months. I actually look at that and think maybe I understand that a little bit.
I don't see the major issue with that though. All right, it's a 4-month notice period. It gives that time to the tenant to find another property instead
which is hard, right?
It's hard right now, so that gives extended period of time to a tenant. I wouldn't really be fazed by that, and the pet thing. Well, if we have a family home that comes onto the market for rentals, we're speaking to that client about having pets because probably 90% of families right now have a pet.
As long as you've got like an ostrich and a giraffe, it's fine. You know,
just dog and a cat, that would be fine. But you know, a lot have pets, so why would you exclude 90% of the market? That's your audience for your property. That's your ideal tenant that you're excluding just because they got a pet. It's ridiculous.
2020 it's changed everyone's opinion on that, didn't it?
So I don't mind the pet thing. I think it's good. Obviously, it might be different if you've got, you know, a flat and you've got a lease on that flat, and you know you might not be able to have a a pet in that property because of that lease, well, that's fair enough. There's a reason why. But if you haven't, it's like, yeah, I mean,
it goes back to
just
the
do
debate
pet.
we had on the podcast before. So if you're watching on any of the social platforms, what's your answer to this? What makes more mess in a house, a 3 or 4 year old child or a well-behaved dog? You know, I think we all know. I think we all know the answer.
Yeah, we just don't want to say it, do we?
Yeah.
No, child. Yeah, I do. I'm quite clear on it.
Definitely child.
Yeah.
So,
My 5-year-old's hobby is putting blue tack places. Like,
What, hiding?
Greasy
Hiding
stains.
blue tack?
yeah,
Greasy
yeah. My
stains.
dog doesn't put blue tack places.
No.
So.
Yeah, I do totally get that. Yeah, so I think, you know, when you look at the Zoopla data, you look at the Rightmove data, it's all fairly stable, isn't it? You know, it's the summary of the market at the moment. What do we think in terms of the investors that are out there? Because there's still a lot of landlords exiting.
Yeah.
I was talking to about 16 estate agents yesterday, and we were saying there's probably a place for... You've obviously got Rightmove and Zoopla as portals for buyers, but there's probably a place for some sort of portal or network for landlord asset exchange at the moment. I think it's a missed little trick that maybe is out there at the moment, where regardless of who it's on the market with, if a landlord's looking to exit, sell their property, and it's got a good tenant in situ, is there a place where you can see all of those as a property investor and go, actually, it's already set up, you know it's compliant, you know there's a tenant in there, there's a tenancy agreement, etc., etc. All of the checks have been done. You can probably log on if you wanted to request and give your details and see a midterm inspection, and all the certificates are in place. But is there a little bit of a place for something like that over the coming years? Because I think that would help keep new landlords in the market, rather than the property gets released, first time buyer buys it and it's lost to the...
Yeah, if you had something like that where it's a lot more clearer that property does have a tenant in, and that it can be an investment property, and this is what the current rent is, this is what the yield is, and everything was clear, it would give you a lot more sales to current landlords or landlords that want to come into the market, because they have all of the information there to make the decision that they want. Everything's a bit fluffy on the portals, where you might have a 2-bedroom apartment coming on the market, and the agent's description is excellent 2-bedroom apartment, 2-bathroom, located in so and so, and that's it. There's no information of it's currently tenanted, this is what the rent can get, this will give you the yield. So if everything was clarified on that, I think a lot more investors would look at that and think, yeah, I'm going to inquire about it, instead of having to go and find the information for themselves.
Because the average agent just goes, oh, it's going to be a pain in the arse to sell that.
Yeah.
But when you actually look at it, it's the best property investment that a landlord could buy, or a new landlord could buy, because it is compliant, it has got X, Y and Z, it's been let, it's got a history. You know, so can we make that?
I did once.
Oh.
What happened to it? Can you bring it back to the party?
Well,
Not a great business then, mate.
Take the jam out of your donut a little bit, actually. I actually built that for a big corporate estate agency, and it fell flat on its face, mainly because landlord sellers wanted top price and landlord buyers wanted best price. So the two didn't marry up very well.
But
Are we in a bit different market now?
All data. Yeah,
I think different
but
market.
that was a red hot buy to let fashionable time as well.
I
Around
think,
about sort of 2015, 2016.
I think the big difference you've got now from a conversation, just snapshot conversation I had with a landlord of 3 yesterday, who called me up and basically said, I've got these 3 properties, the interest rates are killing me, I need them all gone, and I need them gone relatively quickly.
Yeah.
And I said to him, when we value for part exchanges for developers, we do a 0 to 2 week valuation, a 2 to 4 week valuation, and a 4 week plus valuation. The 4 week plus valuation is the normal valuation that an estate agent would give. The 0 to 2 is not quite fire sale or auction price, but it's moving at probably 5 or 6% under market. Yeah, it's going that weekend. And the other one is it's going to be gone within that month. It's going to be gone after process. 5 or 6 viewings, because it's a good clear sale. So I think the mindset for that's potentially a little bit different with the landlords that would list onto that. So maybe we'll just squeeze the jam back into the donut a little bit there, and maybe it's got a place. I don't know. Can you rebuild it, Mike?
If I can find the URL.
Was it a website?
It was a website. It had
But it was an internal
website.
website.
Login. It was incredible. Yeah, if I do say so myself, it was quite a bit of kit. And then it got canned. Quite a lot
Let's
of development
find it,
hours
run it back through chat.
were lost.
But like you said a minute ago, is that the majority of landlords that want to exit now have got the same chat that the guy had with you, is that I need to sell quickly because of, you know, money issues, interest rates, all of that sort of stuff. So, yeah, if you had a system there where everything is there and you've got all the information, it'll probably go a lot more quicker than what it would do by just an agent selling it, trying to fluff it up a bit for a first-time buyer or whatever it is, and not identifying those actual
It's having an
property
understanding
investors.
of what the goals of your seller is, isn't it? And that's where agents just, they don't listen. They just give a 45-minute or 30-minute pitch and just talk at people, and then reduce their fee at the end, rather than actually listening to what on earth that person needs you for. Yeah, because it's two very different things.
It goes back to the conversation, doesn't it? We talk about modern method auction, you know, and we work with a company, and we've had the guys on the podcast previously, but how the conversation is had in the living room with the client dictates whether it's going to work or not effectively. So it's a certain type of situation where it benefits all parties, or it's not articulated correctly, like in this case could be, and it won't work for anyone basically. So yeah, I mean, it's an interesting place out there, because I do think when we actually break it down and you look at a kind of £1,500 a month rental property up and down the country, wherever it is, just call it 1,500. It was probably set up with about a £500 a month interest only mortgage at some point, and now it's probably more like 1150. So it's a big swing in terms of where, you know, you were just creaming £1,000 a month, almost net profit. And now all of a sudden, after a little bit of squeeze here and there, it's a couple £100, and people are thinking, or the ones that have done it the other way around, and, you know, they had repayment mortgages or whatever the setup was previously, and they were still making £600-700. Now they're making £70 and thinking, wow, this is not great. Yeah. So there is a place for that, but there's also a place for really good investments. You know, we've seen loads of different stuff. It brings me back to, you know, the HMO stuff or the co-living stuff that's available out there. Some of the 4-bed detached homes that we've let, you know, we were talking about Ascot recently. Some of the prices that you can get on a 4-bed, you know, detached house in a family area with a good primary school used to be like, I don't know, £2,500, and now you can get like nearly £4,000 for it. You know, so maybe it's spend a little bit more to look at something that's a little bit bigger, whether that's a JV or on your own, but you can really make this work and be kind of in the cream of the market a little bit as well. So yeah, that's my view, is from a residential sales point of view, is pretty stable. And when things are pretty stable as a property investor, you kind of know where you stand. Yeah. Yes. Yeah. Which absolutely gives, it's like, okay, I know whether to stick or twist here, because this is pretty much a read on the market. And if the election was going to be the catalyst of some sort of change in the market, I think we would have felt it over the last couple of weeks, and we haven't. I think everyone's just like, yeah, whatever, you lot, we're just getting on as normal here. So that's good news for investors, I think. Yeah. I don't know what you guys think.
Yeah. I think so. It's just cracking on as normal. Like you said, the stability's there. They can see what it is currently, so that builds more confidence. Now, what happens in the future, obviously, we don't know. Do we? I mean, things could change, but right now, it's just business as normal. Going back to what the government were trying to do with like the renters reform bill, and sort of landlords having no confidence in that, and scaring them into making a decision now rather than later. Well, that's all back to square one now. So they've got to start that whole process again. And then, that's a further 12 months to 18 months before it gets to the Parliament stage again. So you've still got that period of time. So right now, your investment is fine. Yeah. You don't need to get rid of it.
Yeah, so business is normal for investors, for homeowners, for buyers, for tenants in reality. Maybe tenants are the only ones that are still scrapping around a little bit, because definitely around here it is still tough to find that property.
Yeah, it is.
That's the only part of the market when you look at that 4D client of all different client types where it is a little bit of a challenge. But we had one of the avocado partners in today, and we were talking about valuations on a property that was probate valued 12 months ago. And we were both of the view, well, is the market a little bit tougher than it was now? And he's like, no, it's arguably it's better now. So, that is more simple for people to go ahead and move home now than it was maybe 12 months ago. Although rates are up, at least everyone knows where they stand. Buyers are active, properties are selling. We've got our internal data at Avocado, and it all paints a positive picture pretty much everywhere you look. So as long as you can get the mortgage sorted for a buy-to-let or for a residential or a remortgage, then you're okay, really. And nothing, when we haven't spoke about rates here, we'll obviously have the guys from Mortgage Tribe on in a coming soon podcast. But from what we've seen, from an insider's point of view, marginal changes there as well. 1 week they might have slightly gone up, 1 week slightly down, but nothing's really happening in those swap rates and sort of bank rates.
Bank of England rates don't seem to be going anywhere fast either. We've got wage inflation at 6%. Interest rates at 5.25%, wherever they are now. GDP absolutely flat, and house prices holding steady. So it's a bit of a weird economic. No one would have predicted wage inflation at 6%, inflation at 2%, and all these same metrics without some sort of weirdness going on in the economy, right?
Well, Rishi said he was going to do it and stabilise things. Credit where it's due.
Yeah. He did say that, didn't he, actually?
Is 0% GDP increase and a 6% wage inflation stable?
Stabler than it was.
Well, yeah.
It is better.
Everything's better than it was.
Yeah.
But it's a strange thing for wages to be triple inflation or alleged inflation.
I mean, if we're going back to like infrastructure and things like that, I've got a whole different view on it because I can't get on the bloody internet anywhere in the country, but I could go to the rainforest abroad and I could get full 5G. So infrastructure.
You spent time in Vietnam and the internet's phenomenal.
Yeah. I mean, are we selling the post office to China? I don't know, but things like this do worry me a little bit. But in terms of those metrics, it's a hell of a lot more stable than it was before. The press aren't running, rings around everyone with this negative doom and gloom kind of statistics that they had to play with last year, and the market seems okay. So without the want of it sounding relatively boring on the podcast, that's kind of what everyone wanted, wasn't it? So that is good. Let me scare the crap out of you both. What's your forecast for December for the market, rental and sales? What are you expecting to see December this year going into January next year? Do you think there'll be any drastic change? Do you think there'll be any change in mortgage rates, residential sales and rentals?
I'll start with rentals. I think rentals are set fair.
Yeah.
That rough 6% year-on-year increase, which matches wage inflation. Unsurprisingly, we've been talking about it for ages. Wages matching rental inflation is set fair because there's not going to be a load more rentals come to the market.
No.
And the ones that do come to the market are those build to rents, which are high priced. So they're not going to bring prices down in any way, shape or form. Just like when you build a new development, it doesn't bring prices down, it brings prices up.
Yeah.
And that's what's happening in rental. So that's my opinion on the rental side.
Seeing the inflation rate sort of steady for rentals, I think that sort of sets the tone going towards the end of the year, starting off next year really. So there shouldn't be too much drastic change in that, and it all seems fair. I suppose the only other thing that I can see that may change the rental landscape is what the next government do and what they talk about in regards to potential changes in the rentals market with the Renters Reform Bill and tax and other things as well. Again, it might scare some people. They might introduce things sooner rather than later that might have an effect on things. I don't think they will.
Here's my prediction, Andy. You'll be greyer than Ian and balder than me by the time the Renters Reform Bill comes in. And
I'll be talking
look
about
likely,
it for the next 2 years.
Given your head of hair.
I think I'm safe on losing my hair, don't worry.
Yeah, there you go.
I thought that a couple of years ago.
But yeah, so look, we'll have to see. I don't think anything's drastically going to change though, because they'll talk about it. They'll be under pressure to do things. They'll talk about it in between themselves, and then nothing will get implemented, and it will just be the same. At least I reckon
by the beginning of next year. Next year it might be a different story, but I think just carry on as normal. Nothing to worry about. If you are worried about anything, and you're listening, you're a landlord, property investor, then just get in contact with us, and we'll give you the facts. We'll give you the sort of straight talking opinion that you need to hear, rather than hearing all the fluff outside and all of that sort of stuff. But everything looks fine.
I think Andy just announced a Labour government within there.
Well, I mean, look, it seems to be going that way,
It's
doesn't
called
it? Not that I have voted for Labour. I haven't voted for Lib Dems. I haven't voted for Conservatives.
I just wonder
My
whether
vote
those...
is
Still waiting.
kept with me.
I
this year.
never quite trust those like pre-election statistics that are kind of being flown out there.
No, they
Yeah, but-
they quite.
I mean, who
often
do you think's gonna get in?
proved wrong?
Well, if you look at the media, they're saying Labour, aren't they? But I just don't see it. I just think people are too aware of the nonsense that comes with it.
Who would you rather want leading the country, Rishi or Keir?
I'm quite happy to carry on as is.
Yeah.
I wanted Pochettino out for Chelsea. I wanted a change, but I'm not overly looking for a change here. Apparently Ten Hag is staying at United, keeps some consistency.
Yeah.
Do the same thing with Rishi. Let's carry on and work on what we need to do.
Yeah.
So I don't think we need that jolt. I don't think we need to change the demographic drastically of what's being kind of put across here.
What about you, Mike? I can see you thinking
Well,
thoughts
I'd
in your
quite
head.
happily vote for Zippy over either of them. Quite frankly, I don't think the competence of the opposition party fills me with any confidence whatsoever, and I don't think the fact that the country's been absolutely bled dry by a select group of fast lane individuals over the last 5 years sits well with me either. So vote Rainbow.
There you go.
Yeah, I'm happy with that. We'll take it. In the world of...
So we've got one that's going with Rishi, one that's going with Zippy, and the other one's not voting at all. Great.
I think that's
That's
fair
where the
reflection of the
advice
entire
comes from.
country, unfortunately.
let us know what you think.
Yeah.
In the world of forecasting, is it coming home? So what's going to happen in the Euros, chaps? Change of topic. Who's winning it? Who's the big surprise that's going to get knocked out early, and who's going to be top goal scorer?
I am going for... Do you know what? I'd love to see England win it, but I just think Portugal. If you have a look at their team,
You've absolutely done me there. I wanted to go first.
they look solid.
You think Portugal? You think
I
Portugal?
wanted to go first. They played last night in a friendly, and Ronaldo rolled back the years. That's all I'm going to say. And I was thinking Portugal with Ronaldo on the bench will win. Now, maybe Ronaldo's got a little 6 weeks in him. I don't know.
He's a finisher.
He is. Who do you think?
I'm going to say England-Holland final, and England win in extra time.
Wow. Okay.
No, my outside shout is Holland, I think.
They've been winning recently.
They've not got a bad side. They're pretty solid at the back. Top goal scorer. I'm going to randomly throw Lukaku in there.
What? Nah,
Yeah.
I don't agree with that.
Well, we'll have to see. Won't
We'll
we?
have
That's
to
why it's a podcast. It's not on camera. Who are you going? Top goal scorer? Kane?
Ronaldo.
Ronaldo?
Oh, no, I wouldn't say Ronaldo. I don't know.
You wanted him on the bench 24 hours ago.
Well, no, I did 24 hours, but then I saw him play last night. It was absolutely unreal.
He scored about 55 goals this season.
Nicholas Fulkrug. There you go, you heard it here first.
Wow.
Where's he playing?
Yeah.
Germany.
Oh, okay.
German number 9.
Do you know what?
The
No
big
one's
man up
talking
front.
about Germany.
German
No
strikers,
Tony Kroos, out of retirement.
players like Closer, do nothing for 4 years and then turn up and score 6. I'd be surprised if Closer doesn't roll himself out of retirement. Does it every day? I mean, he's 45 now, but
Tony Kroos did, hasn't he? He's come out of
Yeah.
retirement, yeah. He's going to hang up his boots by winning the Champions League and then the Euros and go, yeah.
that'll do.
See you later.
Yeah.
Well, no, I'm going to England. It's coming home. I think surprise people to get knocked out early doors, Spain. I think, or
Do you
maybe
reckon?
Italy. They've got a death group.
Yeah,
Italy might
Italy.
be out early doors. But we'll see. Anyway, thanks for joining us on this episode of Talking All Things Property Investment. Point 1, talking about the Euros.
You've got a bit of the Linekers in you.
I'll do a better job than Gary Lineker, Alan Shearer and Ian Wright, let me tell you that. We're back next week where we talk about all things serious property investing.